Hello, I'm Donald Leggett and welcome to this edition of Share Views brought to you by London South East. I'm joined in the studio today by Andrew Jacobs, CEO of Lok'nStore, a chain of self-storage stores mainly based in South East England. LOK or Lock is the ticker and they've been listed on AIM since 2000. Welcome.
Good morning.
How are you, Andrew?
Very well, thank you very much.
Excellent. Could we start by asking you to summarise your business, Lok'nStore, self-storage business?
Yes.
What's it all about?
Self-storage is a business that appeals to the needs of all humans, be they involved in households or other organisations or government agencies and businesses. Everybody has a lot of possessions and property is expensive, so we help people store their possessions in a less expensive way.
And why is it a growth market?
I think it's a basic human need, and for some reason the industry was just didn't set up in the UK until about 20 years ago. It's rather older in America, with the consequence that there's 10 times as much self-storage space in the US per person as there is in the UK. So the market is still very much in its infancy in the UK.
Nascent.
Nascent is a good word.
And how have you adapted to consumer demand and changes? How have you developed your business in response to all the consumer demand, that nascent demand that we're talking about?
I think I don't think there's been any change in the basic consumer demand over the period that we've been operating, which is now 23 years. I think the industry, and particularly Lok'nStore, has evolved. When we first started in the industry, in the mid-90s, we were mainly using recycled buildings. Let's say we were buying slightly older distribution buildings and industrial buildings and refurbishing them. Once the industry had been going around 10 years, I guess, so the mid-noughties, really those types of buildings had all been used up and they were not available. So from 2006, when we built our first purpose-built store, that really changed the whole strategy of the business. So it changes the financial numbers, and it means it's much bigger capital involved. But if you have the capital, then the new purpose-built landmark stores are extremely attractive, and we build those in very prominent locations in their marketplaces, so the consumers become quickly aware that the service is available.
Okay. If we were to summarise your strategy, then you nodded to your strategy in that answer. How would you summarise your strategy?
Yeah, the strategy of the business is to continue to increase our turnover, our profits, our dividends, and our asset values. And we do that by building an increasing number of what we call landmark stores, which are purpose-built in very prominent locations in busy towns, while maintaining a conservative level of gearing. The business is still, the leverage is quite low. As of the end of last financial year, we were still below 20% loan-to-value ratio. So we do want to do it while keeping a little bit of debt, because debt is very cheap. So our all-in cost of interest last year was 1.85%. So it's quite economically efficient to use some leverage, but we don't want too much.
Okay. And what's your pipeline? What does your pipeline look like then in terms of store rollouts and developments?
Yes, the pipeline is very exciting at the moment. So we currently have 31 stores. We opened 2 stores in December, one in Dover and one in Hedge End, and we'll be opening around 5 stores in the course of this year, and probably around another 5 in the course of next year, with a continual throughput of new sites coming in and new sites opening.
Andrew, in your terms, that's phenomenal levels of growth.
It's
It's
unprecedented for us, yes.
That is very exciting. Where does it take you? At the moment, you're number 4 in the industry.
Yes.
Are you consolidating that 4th position?
We have. Our strategy does not involve overtaking anybody or being overtaken by anybody. We're only interested in the state of our own business. We will be over 40 stores when the current pipeline is developed, and obviously we continue to grow that quite rapidly. I think we remain number 4 in the industry in the UK.
And how do you fund those store rollouts? And are they all owned by you, or some of those stores managed?
Yeah, so there's several ways we fund them. We have a very attractive debt facility in place with, as I mentioned, a very low interest rate, and still at the moment a very conservative level of gearing. So there's plenty of headroom on the facility to keep using that. We obviously have a very positive cash flow, operating cash flow that comes out of the business, so we use that. We also have done a series of transactions over the years where we've effectively used our own assets to generate funds to grow. So for instance, in our site in Reading, we sold off the old store for residential development, and that enabled us to build out a brand new landmark store on the site adjacent. So that's also very helpful in moving the business forward. And then fourthly, as you mentioned, we also have some stores which we manage on behalf of third-party investors. So a third party will own the land, the building and the business, and Lok'nStore will manage that on a management fee and a performance fee.
And how many of those are actually managed? How many of you
of the 40, stores? When the current pipeline gets developed out, I think 12 of those will be managed stores.
And you're comfortable with that as a mix?
Absolutely, yeah.
Great. Okay, given all these positives, I'm looking at Lok'nStore and thinking it's a terrific business. It's clearly well managed.
Thank you.
What's happening to the net asset value? Why are you operating under your net asset value when your peers are doing rather better than that?
Oh, the share price.
The share price.
The
yes.
share price. I don't know the answer to that. The stock market does.
Can you guess on our behalf, given that you know a lot more about the business than we do?
We're slightly smaller than the 2 listed competitors. Other than that, I can't see any reason.
You're not allowed to punt your own shares, clearly. But is this an opportune moment for retail investors to look at your stock?
All I can say is the business is doing extremely well. The share price looks like very good value at a 20% discount to its net asset value, and 2019 looks very encouraging.
Yes. Okay. So you heard it here. What does your shareholder base actually look like? Who holds your stock? Is it a mix of institutions and retail investors? Yeah. And to what extent is there a free float?
The free float of the stock, I think the official definition is anything that's held outside the board. The board hold about 30% of the stock, so that gives you a 70% free float. Of that 70%, I think roughly half is held by institutional investors and roughly a half by individual investors. We have quite a strong individual shareholder base because you have the strong net asset value of the business, very good dividends and a very predictable and growing dividend. And being on AIM, there's also some inheritance tax portfolios that hold the stock.
You delivered a dividend of 10% last time round, is that right?
Yes.
Well, that's a pretty healthy dividend, isn't it?
Yes.
I can tell you're just after Christmas. You're not really in the mood for talking, are you, Andrew? Okay, what are the main threats to the business, and have you been affected negatively by Brexit uncertainty, the dreaded Brexit word?
Yes. We are, I hesitate to say, unaffected by Brexit, but we don't have a physical supply chain, so we're not importing, we're not exporting. We operate in southeast England generally, which is affluent and continues to grow economically. So we haven't seen any Brexit effect at all so far. I can't say we won't, but we haven't yet. And I forget the other part of your question. That's 2019 generally.
Yeah, no, I'll ask you a direct question about. So it's just Brexit uncertainty, really. Have you been affected by Brexit uncertainty? You do run a consumer-facing business.
The answer to no, we haven't visibly been affected by uncertainty.
So what's the outlook for 2019? That would be my final. And give me something positive to go on, Andrew.
Absolutely. Well, the outlook for 2019 is extremely positive. We continue, turnover will continue to grow, profit and assets and dividend will continue to grow. We'll be opening 5 new stores. and that will be contributing to further growth, as have the stores that we've been opening in the last few years. So 2019 looks very positive for us.
Andrew Jacobs, CEO of Lok'nStore, thank you very much for joining us.
Thank you.
And for more interviews like this one, please subscribe to the London South East YouTube channel. Thank you for joining us today.